Hello and welcome. You're watching KYC. I'm Hersh Sayta, with me is Puneet, Javeri, and today we're going to be tackling an auto ancillary company. We did that last week as well. Auto continues to be in focus, of course, with everything happening around magnets. Which way does the tide turn is really the question, and either way could actually swing stocks as well and could impact the sector as a whole as well. So you want to keep that in mind. But today is an interesting company. We're going to be talking to Talbros Automotive. Quite a few reasons as to why. First off, they've given a 2200 crore top line guidance by FY27. And in running to that, what they've also done is they've won an order today of 580 crore. And therefore, it's in focus today in particular. I want to know how much of that order actually contributes to the business in terms of the 2200 crore top line, as well as what does it look like in terms of order delivery timeline, whether a repeat of some of these orders could well pile up even into the future beyond FY27. So that's something I'm really looking out for. The other one is the margin uptick. We've seen good margin uptick, in fact, and across product lines. We've rarely seen that, but it's very healthy in terms of a trend. Can that margin uptick trend continue is really the question. They've done it in FY24, Puneet. They've done it in FY25. Can that margin uptick really continue? Is that sustainable? Third one is the most important piece. What's the impact of magnets on the business? That's the golden question that everyone's asking, at least within the auto space. And last off, I'd want to know, what is the capex like? Because when you're going from sub 900 crore in terms of top line to 2200 crore, your capacity ramp up is going to be sharp. And therefore, what's the capex outlook like? And if this 2200 crore is even to be compared to the 1200 crore cumulative business, including the business that the JVs do, then too it's significant. And therefore, what's the capex and how does utilization evolve? How do they fund the capex? So all of those questions and more is what we'll quiz management on. But first off, I want to start off by understanding what the company does. And I'm going to try to explain that. It was established in 1956, and it's an auto component manufacturer, primarily into gaskets. I will explain what gaskets is. They've been doing this for the last 59 years. But outside of gaskets, now they do forgings, chassis, and anti-vibration products as well. So I'll try and quickly take you through all of those product baskets that the company really is into. First off, gaskets. I'm going to try and zoom into gaskets first, because 50% of the top line comes from there. It has a 50% market share as well in the Indian market with regard to gaskets, and it is 3 times larger its nearest competition. So it's fairly large in that sense, and it has a good moat where gaskets is concerned. But what is a gasket? One, it's a seal made up of rubber, paper, or metal. It allows an auto company to join 2 surfaces. This avoids any leakage of liquid or gas, right? And that is required across the auto component chain, if at all you are an auto OEM. And therefore, all of those small rubber tubes that will fit between 2 components of an auto car or vehicle could well be called a gasket. And it's made up of rubber, paper, or metal. This allows and ensures that the liquid does not leak when moving from one part of an auto vehicle to another. So that is what a gasket is. Again, critical. There you go. It's on your screen. It's critical, of course, for an automotive company. You want to elaborate on that, Puneet?
Well, essentially, it's of course the company's moat there, and largely because they have almost a 50% market share here.
Yes.
So I think we'll speak to them also about how, and I think with the expansion of new categories, I think that's one of the key things that I also want to know, because how is the margin shaping up across parameters? But for gaskets, there's definitely a very strong moat that the company has created.
Exactly. So that's what a gasket is. I hope we've put it as well as we can. Forgings. Well, the forgings now, in terms of what it does, It's a metal which is bent or cut into a particular shape. It's used in aerospace, auto construction, power generation, and the like, and therefore, again, an important component in the auto industry, as everyone would well know. It's also used in the construction space. And how do they do that? They do it through heating a metal and compressing and subjecting the metal to force, of course. And therefore, forgings is the other piece that they do. One is gaskets, the other is forging. Then there is chassis systems. This is actually the foundational framework of an auto vehicle. Let's talk about the foundational framework as the absolute bottom of an auto vehicle, on top of which comes the engine as well as the body, and then you have all your other parts inside, including the seats, etc. So the absolute skeleton of the car is called the chassis. It supports the vehicle, it's the mainframe, and this business is done through a 50-50 JV with Marelli Italy, which is an Italian-based company, and it's a very small part of the overall business of the company. So I won't delve into this in very deep detail, but at the same time, it's important to know because it's part of one of the products of the company. Then there's rubber components and hoses. Now this is done through a 50-50 JV with Marugo, Japan. It supplies to the domestic Japanese market. So that's how the breakup of the business is. Let's talk about the revenue breakup as well. Now in terms of, this is the overall revenue of 1250 crore. This is how the breakup is. You have gaskets, which is 44% of the revenue consolidated, including the JV's total revenue. Forgings is around 23, chassis is around 23, and rubber is around 10. Mind you, chassis and rubber is through JVs and therefore contributes a lower quantum, which is sub 900 crore in terms of the overall top line. So a far lower quantum in that sense. Where are the products used? And this is the other important metric. One is agri and off-road vehicles, commercial vehicles, electric vehicles. So it's across the vehicle supply chain, industrial, passenger vehicles, and 2- and 3-wheelers as well. So again, across all categories of vehicles, across the supply chain of vehicles, and therefore largely and very, very solidly entrenched in the auto space is Talbros Auto. Puneet, you want to add anything to this?
No, I think it's largely fairly covered. So let's get into the metrics now. Yeah. First, of course, the income statement as well, because while the company has grown decently in this particular time frame, roughly about 800 crores of revenue is what they've done, 820 crores. But the CAGR over the last 3 years at 13%, while decent in terms of company performance, when compared to peers, the peers have had a higher growth in this particular time frame. And hence, we've given it a neutral rating on that aspect. The company, although giving, some confidence to it, has improved its EBITDA margin profile, and that's something that we addressed briefly in the first few minutes, that within JVs as well as the company's business as a whole, they've done well. In terms of margins, also 17.8 is very, very strong for the company, and that's largely because of even the gasket division, which is a high margin business. The standalone business only does 17.3, but the other verticals have started to contribute and not dilute those standalone margins. So that is where the confidence is coming from. Profitability, as they're close to 100 crores now, has grown at a similar pace to revenue, but that is something to watch out for in terms of growth, and that's what the company is guiding, and we'll speak to the management on it, but largely giving it a neutral, not because of the decent performance, but because of comparison with peers also, Hersh. That's something.
Yeah, and the top line growth, right?
Yeah.
I mean, sub mid-teens is not something that, or early teens is not something that you expect from a company which is 2,000 crore in market cap.
Yeah.
Of course, you want more in terms of that growth number. So that 13% growth number doesn't look impressive, but EBITDA, definitely things working and chugging along well in that sense. Now, let's look at outside of the income statement, the other metrics also that we look at. Let me quickly cover those. Balance sheet, cash flow, return ratios. We'll also look at shareholding, street cred, street outlook, and valuations. Now, I want to quickly look at the balance sheet. In terms of the size of the balance sheet, it's around 630 odd crores. So it trades at a 3 times price to book, because they're around 2,000 crore in terms of market cap. So that's the first point you need to know about. The second point you need to know, it's doing well in terms of equity growth. Debt is low. They just have an 80 crore rupee debt, frankly, and which is largely a short-term debt. The long-term borrowing is extremely light and therefore no concern with regard to the debt structure. So we'll quickly give this a thumbs up and move on. No concerns with regard to the balance sheet. The cash flow, Puneet.
Well, the cash flow is also very interesting, and that's largely because this is probably the first year where the company's net cash flow has actually not even just come in positive, but come in double digits. So 12 crores is what they've done in net cash flow. And the concern was always in terms of net cash flow, because cash flow from operations has grown at a decent CAGR of 26%. But between FY22 and FY24, the net cash flow was negative to negligible in this time frame. The major gain has come in FY25 as visible on your screen, 12.5 crores, and hence the CAGR has gone up dramatically because of that. But that's largely led by FY25 performance. We've given it a thumbs up because the company is expecting to continue generating the net cash flow, and that reflecting in the business as well. So thumbs up on that aspect, Harsh.
Yeah, well, so that's a thumbs up. Let's look at return ratios now. When you're looking at the return ratios, they're in the late teens, and now they've finally hit 20% as well in FY24. It's come back off a little bit from that number, but nonetheless, it's a very, very decent kind of a return ratio. And the ROE number is around 19% for FY25. So quite decent in terms of return ratios. Mind you, the improving margins are only helping the return ratios, and therefore that's something to keep in mind. Can that return ratio continue to expand as they do future capex is one of the questions again on my mind. But Puneet,
largely in terms of shareholdings, yes, because it's been quite stable, nothing to complain about really, and that's a trend that we've actually seen across automakers and auto component makers, largely because they maintain the shareholding, build the business over decades. So we've not seen too much in terms of shareholding for the company in terms of foreign as well as domestic mutual funds. Foreign investors as well, just 0.7%, but largely the retail investors always there in such companies, niche products, high market share, and you can never go wrong with such business as well. So retail investors always very quick to have such companies on their radar, and that's definitely reflective in the shareholding as well. So we've given this a thumbs up again on stable promoter holdings as well as the retail investors picking up a decent stake in a decent company.
Okay, let me therefore quickly take you through street cred. Now, in terms of their street cred, you look at the 1 month performance, the stock is up 14%. But when you're looking at it over the 6 month, year to date, almost 1 year performance has been largely muted because we've had a phenomenal run in terms of the stock price. We've seen it go up 16x in the last 5 years, and therefore no complaints for a muted year. But nonetheless, we'll give this a neutral because the last year or so, we've had a bit of sluggishness where the stock price is concerned over the 1 year period. So you want to keep that in mind. The dividend yield, of course, on your screen. So that's what it looks like in terms of street cred. Let me also touch upon outlook in terms of what the expectations are. It's going to be a 2,200 crore FY27 revenue target. That's what the company has guided for. And in terms of the big positive news, I want to cover this slightly more in detail. That's the big risk that's on your screen. Company seeing delays due to company seeing execution delays due to order delays, especially on the OEM side. So you want to see launch delays on the OEM side causes some bit of a drag with regard to how the company executes as well. So that's something you want to look out for. But the big positive news is the 580 crore rupee order win that the company has clocked. 260 crore of it comes from gaskets and heat shields, which is the largest segment, 50% of their revenue, as I did mention. 290 crore is coming in from chassis components through Merelli. So, and that may not entirely flow through to Talbros because that's a 50-50 JV. 160 crore is coming from the EV segment and 150 crore from export. Why is this relevant? I want to understand whether this is actually margin accretive for them or not. How much is the execution or how quick is the execution is really something to be seen. But those are some risks which I have outlined for you. So outlook looks positive. There are some risks on the horizon along with the tariff risk as well. You want to explore all of those. Valuations, Puneet, very quickly.
Yeah, very quickly because the company does not have any analyst coverage. So we've taken the trailing price to earning multiple of FY25, largely hovering between the 20 times price to earnings as of now. It's quite a number that's similar to peers operating in that environment, but if the company is actually able to execute the company's revenue guidance. Now they've guided for 2,200 crores earlier in FY27. There could be some delays now. We'll quiz the management on that. But even if it's able to double its revenue, because see, revenue is right now 827 crores. Even if the company is able to double their revenues in the next 2 years by FY27, coming around 16 to 1700 crores, and they can do that because they have the order book. The price to earning multiple and valuation then turn very favorable. So we've given this a neutral rating. That's largely because of getting some more information in terms of the next 2 years in the order guidance, but largely very stable, a neutral rating to end the valuation note.
Okay, let's quickly look at all the metrics and put it up, stack it up together, give you the KYC rating at the end of all of this. Income statement, more to be desired on the top line. We'll have to wait and watch how that plays out. Balance sheet, cash flow, return ratios, shareholding, street cred, outlook, and valuations. It all stacks up to a 6 on 8 on our KYC ratings. But we're joined in by Naveen Juneja, who's the CFO and whole-time director at Talbros Automotive, to talk to us further and take this conversation forward. Mr. Juneja, I want to first start off with this 2,200 crore top line guidance that you've given. Tell us whether this is on the basis of the group turnover, which you generally disclose at 1,260 crore. Are you going to grow to 2,200 crore by FY27 on that number? Or is it on your consolidated reported revenue from operations number of around 830 crore? What is this 2,200 crore guidance for? Give our viewers some perspective.
Thank you for having me on the show and our company. First of all, I want to clarify that 2,200 is our guidance for 2027, which we gave 2 years back. It included my JV or Nippon Leakless, which we divested from in last January 24. Okay, that turnover was 200 crore in that 2,200 guidance. If we take out 200 crore out of that, then the revised guidance comes to around 2,000 crore. This guidance is from all the JV's company turnover together. Last year in FY25, we closed at 1,261. At approximately 1,250 or 1,260, we closed as against 2,000. This year, we expect a minimum growth of around 15% because last year, growth was already 7%, we are aware, because of the delay of launches and some product redevelopment of some products for major OE customers. That is now in line. We expect this year should be around 15% and next year should be 20% plus. With this, we should be around close to 2,000, not 2,000 exact, maybe 4-5% below that. That is our vectors. Of course, the order book is very much there in hand. Order book is much more than these numbers. We expect that the delays which we have happened, something will start in this year, maybe 50% will start this year, and 50% will come in next financial year. Then going forward, it should be much above that.
Mr. Juneja, good morning, sir, and thanks so much for joining in. I think we're speaking almost after 4 quarters, so a lot of change in the last 1 year. Just wanted to, have a couple of follow-ups on what you said. You're expecting 15% growth in FY26. Is that what you said?
Yeah.
So is this slightly higher? Because I was just going through a transcript for Q4. You mentioned 7 to 8% there. Is that because of the new order that's coming now?
Yeah, new orders which were delayed. Major order is being, I think, being commissioned in the third quarter of this financial year. And that is one. And some other orders which were delayed are being commissioned in this year. A new order book which was delayed or commissioned this year, but maximum growth will come in 26-27.
And Mr. Juneja, you had roughly about 1,400 crores of order wins in FY25, and correct me if I'm wrong on that number, including this 580 crores now. Is your order book close to somewhere around 2 to 2,500 crores?
Yeah, if the order book is more than 2,000, during the last 15 months, we announced the order book of more than 2,000 for a period of next 5 years, out of which in this financial year, order book of around 13 to 1,400 will start commercial production, but the full year turnover will not be there. This is a 5-year turnover. And if we take out 1 year, it's around 300, it's around 200 plus. The impact will come in the third quarter onwards. Major impact will come in the third quarter onwards. And the next financial year, full year impact will be there.
Mr. Juneja, so effectively in this year, we should expect the company to clock in somewhere around 1,500 crores in terms of revenue. Got that? And I just wanted to extend the conversation to one of your JVs as well, which is the Marelli JV, a very important JV for you, chassis as a product. So you mentioned that you would be supplying to some EV makers from there as well, including Maruti. Now, there has been some news flow around some delays there. Now, I know you can't comment on a client-specific issue, but is there anything that has been any ongoing conversation inside? What's the expectation from the revenue of from coming from this joint venture?
Yeah, this year we are expecting a revenue around 380 crore from this joint venture, as is 285 of last year. We expect that this figure will not change much, maybe marginally by 5 to 7 crores. That's all. In spite of what we heard yesterday.
So the other piece is you've done well on the margin count, right? You're looking across product lines, margins improving, despite growth not coming in a significant fashion. Now, with growth coming at 15% and 20% over the next 2 years, where do margins go? Give us some perspective on that.
Yeah, margin, of course, don't take the benefit of last year. Last year we did well. We don't pass on because of the top. We didn't, I think, pick up the stuff which they ordered to us. We were ready with everything, machines and manpower. So we don't pass on the benefits of the price metal reduction to them. Now this is all over now. Now we are normal this year. So we expect around 16.75 to 17% EBITDA margin going forward. Definitely we will achieve, maybe better than that.
Okay. And where do you get the best margins, sir? Do you get it in EV? Do you get it in export? What are the places which are margin accretive for you? Because these are some of the faster growing elements in your top line. Exports, EV, even Kia for that matter, likely to, how close are we to that and how quickly do you ramp up on that? Are all of those components margin accretive for you?
Yeah, maximum margin is from the export. And export is mine.
So what would the difference? So what would the difference in margins be?
Between minimum 3% difference.
Okay. Okay.
My margin is for 15% in normal business, OE business. It should be 18 to 19% there. But there are extra costs attached to that also.
Got it. And so any impact with regard to this entire rare earths issue which is playing out in the auto space? Are you seeing an impact of that on ground? Are you anticipating that?
Of course, we heard the Maruti had delayed their launches where Marelli is supplying their product to the EV. Of course, but they have promised it will be over within the next 1 year. We are looking for the longer picture, not quarter-wise picture. In the longer term, we will achieve all whatever we promised to the shareholders. But here I also want to mention that as of today, our group is standing, whatever we did last year, 2.6% of our total turnover was in EV. Beyond that, we are sitting at I think the EV business of around 130 crore per annum, extra business which will come in this year are coming, going forward, it will come. We are sitting on the order book. Confirm order book, parts developed, tested, everything done.
So, Mr. Juneja, just a follow-up. So, currently you've gotten an order of 160 crores today only in the EV space. If you say 10 to 12% also, that's roughly 10 to 12% of your consolidated revenue, right? 130 crores approximately when you look at...
Yeah, I think it will be there in 2 years. 2-3 years, definitely. 160 crores is for 5 years. If you divide it approximately 30-35. Besides this, we are already sitting on an order book around 80-90 crores from the EV, which we declared earlier. Already sitting on the order book. Of course, the delay is there, but till when? Because we all know that EV industry is not growing the way they wanted to grow and the way government wanted them to grow because of the reason ABCD, which we have no control on. But it will come. Over a period of time, it will definitely come back.
And so just one question essentially on, your orders with Tata Motors. Has that already come in across verticals? There was some order which was expected to come in, the heat exchanger segment as well as for the EVs. Has that already been accounted for in your current order book as well as your expectation from heat segment as well in terms of revenue, what you mentioned?
Yes, the order book already there yesterday, but today we announced it includes the Tata Motor order for my vehicle, EV vehicle launched next year. It's already there in there.
Sir, in terms of capacity utilization as well, you are running in terms of capacity utilization over 80% in quite a few of your segments. In your current capex guidance, does that include capacity increasing from now on as well, or is there any plan to increase capacity over the next 24 to 36 months?
Yeah, definitely we are increasing. Really, we are increasing capex of looking forward the growth of future growth. We are expecting a decent growth of 30% in this business. So we are adding a capacity of doing capex of 60 crores in this financial year. In other segment, gasket and shield, we are already did a capex of 20 crore last year. Next 2 years we'll do 30 to 40 crore capex. In forging, we are adding more presses, more hammer. I think the capex in next 2 years will be around 40 crores in this.
So what would the return ratio be that you would like to maintain on this fresh capex as well? Would a 19% return ratio be justified?
My return ratio will be close to 20%.
Okay.
Close to 20%. Give 5% margin here and there.
Okay.
Close 20%. Very clear.
And sir, just your last anything on forging as well, because there's some delay last year from in terms of inventory reduction from BMW. Is that issue sorted now? And for forging,
Yeah,
because it's okay, that issue is sorted now. Good to know. So your
issue is sorted out, and this year we are expecting growth of more than 15% from this year.
okay.
So sorry, totally out of time. But on Kia, any update?
Yeah, commercial launch is going to start very soon. Products have been cleared. No commercial are being discussed. I think we will start supplying within the next 2 to 3 months.
2 to 3 months. Okay, awesome. Thank you so much, sir. This has been an engaging conversation.
Thank you.
Okay, so frankly, out of time on this edition of KYC from Puneet, myself, everyone who puts the show together. Thanks so much for watching. Stay tuned to NDTV Profit. More action on the other side.